from Bitcoin's market cap in just the last 7 days.
So you see a drop that big, and you have to ask, right? Was this just the market doing its random thing, or was price being pulled, almost magnetically, towards something we can actually see in the data?
Well, the answer is right here in this heat map. This thing shows us exactly where the money is sitting. We're talking about leveraged bets just waiting to get liquidated. And what's really wild is this huge $108 million wall of leverage that popped up after the crash. It seems totally backward, but we're going to explain exactly what it means. And hey, if you find this stuff valuable, do me a favor and drop a like and share this.
Okay, so here's the key thing you need to understand. Price action is not random. You got to think of it more like a predator. It's actively hunting for these big pools of leverage money because that's what fuels the big moves. And this is the hunt in action. Look at the image on the left from January 23rd. See that incredibly bright, dense yellow band of money forming right around $88,000? Okay, now look to the right, just 2 days later. Gone. The price sliced right through that zone, leaving behind that purple void you see. The hunt was successful. This is the kind of analysis we do every week, so be sure to subscribe to the YouTube channel so you don't miss the next one.
But here's the thing. After that big meal, the market's momentum just stopped. It completely stalled out. And that has created a brand new and, honestly, a much more dangerous market structure.
Which brings us to the big question, right? Why did the price stop falling right where it did? Because new walls got built. Just look at this updated heat map. You can see these really dense yellow bands have now formed both above and below the current price. They're acting like powerful magnets. You've got support underneath and heavy resistance on top. And it's basically trapping the price in this super tight compressed range. We're keeping a close eye on this, so for real-time updates, you should definitely follow us on Twitter. All right, so let's get back to what we talked about at the beginning. It's time to dig into that $108 million anomaly.
I want you to look at the scale on the far left of this chart. See that number? 108.63 million. That's the peak liquidation leverage. And let me tell you, that number is astronomically higher than anything we saw just a few days ago. This isn't just a small change, it's a total explosion in risk.
Let that sink in. $108 million. That represents a crazy amount of money from traders betting with very high conviction on where the price is headed next. Now, that much leverage is basically like pouring gasoline on a fire. It means the next big move, whether it's up or down, is going to be incredibly violent. If this kind of data is giving you an edge, please drop a like and share this explainer with someone.
But this whole story isn't just about traders and their bets. To get the full picture, we've got to zoom out from the market structure and look at the fundamental health of the Bitcoin network itself. Take a look at this table. It compares some key network stats from January 19th to the 26th. Yeah, the price drop is obvious, we've covered that. But the really critical data point is right here, the estimated difficulty change. It swung from a really healthy positive 10% to a deeply negative 12%. That is a massive, and I mean massive, reversal.
So what does that actually mean? Well, you can think of mining difficulty as the heartbeat of the network's security. When it's going up, the network is strong and healthy. But a sharp drop like this one, that's a huge red flag. It suggests miners are actually turning off their machines and walking away, which in turn reduces the network's overall security. Understanding these fundamentals is so important, so be sure to subscribe to the channel to stay on top of these shifts.
And this right here, this brings us to the absolute core of the situation we're in right now. You've got a weakening network crashing into a massively over-leveraged market. It's just a highly combustible mix of internal market risk and external network stress.
Okay, so let's just quickly recap the main takeaways here. Over $110 billion gone from the market. Price is not random, it's on the hunt for leverage. The market is now completely stuck between these new liquidation walls. A monster $108 million wall of leverage has shown up, which is screaming that huge volatility is coming. And most importantly, the network's fundamentals are showing signs of weakness, with mining difficulty expected to drop.
So all of this leaves us with one final, absolutely critical question. With a fragile network and $108 million of jet fuel just waiting to ignite, which wall is going to break first? The support below or the resistance above? Make sure you subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.